Hi, my name's Emma Brown. I'm here with my colleague Susie Mullin, and we're going to be talking about all things tax in relation to entrepreneurs selling their businesses. Susie, before a transaction, what are the types of things that entrepreneurs should be thinking about? What should they be getting ready?
Yeah, so I guess the first question is, as people, what should they be thinking about before they sell their business?
Agree.
At the moment, obviously, inheritance tax rules are changing, but anyway, for business owners, one of the key things to think about when they're selling their businesses is the change from being entitled to business property relief, which is a shelter from inheritance tax, to actually, if they're selling fully for cash, having just a huge amount of cash within their estate and thinking about the inheritance tax implications.
So when people sell their businesses, obviously, for most of them, it's a big wealth event. There's a lot of capital gains tax at stake. Is there anything that they can do in terms of their personal structuring that might help alleviate that burden?
Yeah, look, for me, the most important thing that people should think about when they're in the middle of a transaction is how much tax am I actually going to have to pay? So they've put that amount of money aside when they're ready. But then they do need to think about what they're going to do. What is their wealth planning afterwards? Who are they going to give money to other people? How are they going to invest? And they're all things we talk to people about during a transaction and after a transaction as well.
So when we're talking about capital gains tax, there are some reliefs out there. How could an entrepreneur make the best use of those and structure their affairs before a transaction in the right way?
So I guess the first question for people is, do they qualify for business asset disposal relief? Did they get that now magic 14% on the first million? We also talk to people about spousal transfers, not as valuable as they once were, but is there an ability for their spouse to benefit from business asset disposal relief as well if we are far enough in advance from a transaction? So we think about those things. Yeah.
Susie, what are the other things that entrepreneurs should be thinking about? What are other common issues that maybe crop up as part of the deal that they might have been able to sort out pre-deal?
Yeah. So look, a really common issue for us when we're selling business to people, they come to us and say, these people have either got shares or more commonly, we've offered shares to people or promised shares to people, we've not quite sorted it out. The time to sort that out is as early as possible. So for us, in that sort of 12 to 24 months before a transaction, the really important question is, are the people in the business who you should have given shares to, who you've not, who you'd like to give shares to now? Getting that management equity allocation right early is really important. I guess from my perspective, Emma, so you do a lot of due diligence, I think, for our clients when they're selling our business. So what exactly does that involve?
So there's lots of things that the company can do as well as the entrepreneur just to make sure they're deal ready. These companies are going to be put under the microscope in terms of due diligence. The buyer's going to want to understand what they're buying. So if we can almost do a mini due diligence, a health check exercise, we can understand where the gaps are, where the questions are going to be. And equally, if there have been things that maybe haven't been done quite in the right way, let's get the skeletons out of the closet, make the relevant disclosures to HMRC, and really try and give that company a clean due diligence file. So when they're going through that transaction, the buyer isn't concerned and neither are their advisors.
Yeah, that's really helpful. I assume that doing that early means you're well prepared.
Absolutely. And the more time we have to communicate with HMRC, the better on some matters. We know they're not always the fastest people to respond. So we need to be able to make sure that we've got that time, and an 18-month, 2-year run-in is ideal for this purpose.
Yeah, brilliant. Thank you.
Susie, thank you so much for today. Really insightful thoughts. And if anybody needs any help with understanding the tax implications on selling their business, please do either give myself or Susie a call. Thank you.